Hi there, welcome back to ET. Now you're watching Buy Now, Sell Now with me, Kanishka Sarkar and Asheshad Baryu, and also joining us today is Snehi Shah on the show. You've joined us from the SBI Live Studios, and this is a show where we'll discuss all the stock queries that you have been sending us, and we'll also be joined by some of you who will be joining us on the calls and discuss all the queries that you have with our experts. But before that, a quick look at the markets. Now, Ashesha, we did start on a positive note, but at this point we have declined and are trading in the red, given up that 24,700 mark as well. And, it's trading near the day's low point.
Indeed, we have given up all of those morning gains. In fact, indices are in the red. Nifty at the moment is down 37 odd points near that 24,700 mark. In fact, it has now fallen below that 24,700 mark. Nifty Bank is also shed nearly 200 points in trade today near that 53,700 mark. That one should also come up here on the screens. 53,870 is where it is currently trading. In terms of individual stocks, we have ITC. That one is the biggest loser on the Nifty 50 index, down 2.5%. TCS, Infosys, all of these IT stocks continue to remain under pressure for the second consecutive day today. Remember, Nifty IT index was also the biggest sectoral gainer yesterday, and that fall continues. Infosys, that one is down over 1%. TCS is also down nearly 1.5% in trade today. On the gaining side, though, auto stocks continue to remain on fire for the second straight day. Nifty Auto Index itself is up nearly 1.2% as we speak. M&M, after gaining a solid 6% yesterday, is up 2.5% in trade today as well on the back of this big GST move that came in. Eicher Motors up 2%, Maruti, Exide Industries, Ashok Leyland, all of them gaining anywhere between 1 to 2% in trade today. On the losing side, though, FMCG stocks, they were gaining in trade yesterday, but we are seeing some bit of profit booking come in as far as these FMCG stocks are concerned. ITC, I just mentioned that, but apart from that, we have Emami. That one is down 2.5%. Emami is also the biggest loser on the Nifty FMCG index. ITC and Colgate are also some of the other laggards. But we now have the management of Bata joining us, and Snehi will take us through that.
Well, yes, we have the management of Bata India joining us. Mr. Gunjan Shah, the MD of Bata India, is joining us on the show. And Mr. Shah, hi, good morning, and thanks so much for your time. You know, Mr. Shah, lots to talk about in terms of the GST announcements we've heard. Because on one side, a positive now is that the price bracket has now been increased to 2,500 from 1,000 earlier, and that entire range is below 5%. On the other side, what still costs above 2,500 continues to be taxed at 18%. So give us your sense on what you are making on these announcements and how much of a demand lift are you expecting in your mass and mid-range portfolio?
Okay, lovely. Nice talking to you and nice talking to the viewers of ET Now, right? Good morning to everyone. I think, the announcement that the Prime Minister made on the Independence Day and the follow through that the Finance Minister has done, I think is very, very welcome. It's very impactful, I assume. For us, this entire portfolio, which is below 2,500, is almost about 80% of our business. Therefore, will be obviously significantly impacting and easing stuff for consumers. We have been anyways in a process of providing value to consumers and who have been stressed, especially the middle and mass consumers. So this GST is completely in line with that. And we are looking forward to obviously making sure that we come 22nd, we pass it on to consumers. But what we have already done is that we have already launched off a campaign right now, even last week, which is basically providing consumers the benefits of it. So we are very hopeful that this should have impact driven on growth, driven by volumes.
So appreciate that view, Mr. Shah. Also help us understand, is this or do you expect this to change consumer behavior in your stores now that products under 2,500 are at 5% and you do also have a sizable premium portfolio? So how are you gauging demand trends and what is the situation?
Yeah, so we are, Bata as a brand and a banner has been basically catering to consumers across the pyramid, and we will continue to do so. So we will have obviously premium consumers, but however, as I mentioned earlier, the middle and mass consumers have been stressed because of cumulative inflation, etc., and cost of living. And therefore, I think this entire action and initiative taken by the government on GST all across, including footwear, I think is going to provide a relief to that consumers, and we are more than happy to make sure that we play a part by passing it on to consumers. we are expecting, as I said, that should have resultant effect on their consumption sentiments and therefore volumes.
And also help us understand, like we were talking about earlier, for products above that 2500 mark, GST still stays at 18%. Now, what could the impact be on some of your offerings like 9 West and Hush Puppies, for example? Now they will fall under that 18% category. So what's the outlook here?
No, so these premium categories were anyways relatively doing well, even in the preceding period. So I am assuming that the momentum should continue there. And the overall flavor of consumption, etc., will also hopefully positively impact even that segment. But the focus would be on making sure that the middle and mass consumers below 2500 see the benefit of the announcement of the government and the relief thereof on GST.
Right, and let's also talk about some of your ancillary offerings. Socks, for example, and other textile accessories, they've moved from 12% to 5%. How big is this an opportunity for ancillary categories, and what percentage are they of your overall portfolio?
So ancillaries are about, I think about 9 to 10% of our retail sales, and wherever applicable, not all categories have been impacted similarly under GST. But as you mentioned, socks is a large portfolio, very adjacent, is most of the time sold in conjunction with the footwear. And I think we will, as we are committed, and I have given statements in the past, we are committed to passing it on to the consumers. So we will pass it on in socks also.
Good on that front. Also, sir, give us your understanding on how this shifts the consumption demand between unorganized and organized retail player. Do you think this is going to be very incrementally positive in terms of the kind of shift we are seeing to organized retail?
Should impact. I think the reverse happened when the GST was increased from 5 to 12 for the below 1000, and therefore now this announcement should impact and bring in more consumption and consumers into the fold of GST organized. So we are very hopeful on it. We'll have to see how it pans out over the next few months.
And lastly, before we let you go, Mr. Shah, I remember during our last interaction, you did say that you expect about 30% of your revenue from tier 3 and to tier 5 markets. Now that, this has, the GST rationalization has come in, and you did stress upon how this is going to impact the mid-income portfolio. Are you still aiming at this number, a 30%, or maybe something higher?
Hopefully, it should grow even faster. Our objective is to make sure that a large part of urban India, which is urbanizing very fast, especially into these tier 3 to tier 5 towns, get the best of experience that the metro consumers get to see. And our franchise model has been the flagship in terms of trying to make sure that we get that access going, and along with a multi-brand distribution channel, etc. And that is something that we will push the levers even harder on. We normally add about 100 to 150 stores in these towns every year, and that momentum continues. Maybe will accelerate going forward.
Sounding good on that note. And Mr. Shah, lastly, just give us a sense of what the festive demand is looking like on ground. How is this quarter shaping up?
We are very hopeful. I think the festive is a little early this time, so we should expect that. I think there will be some transition hiccups because of the GST transition, but we are very hopeful in general leading up to Diwali. I think there should be significant momentum aided by the GST announcement by the government.
Shah, thank you so much for taking the time out and speaking to us at ET Now. Wish you the best of this GST rationalization and hope to connect with you soon.
Thank you very much.
Thanks so much.
Okay, so that was the management of Bata India for you on the back of that GST announcement that came in 2 days ago. But on that note, we need to
Send their queries yet. The number is flashing on your screen, so do write to us. Don't forget to mention your stock name, your specific query, and your holding time horizon. And to answer today's queries, we are now joined by G. Chokalingam, the founder and head of research at Economics Research. Hi, Mr. Chokalingam. Thank you so much for joining us. Very good morning. Well, let's get started with all the queries then. Now, first one is coming on RVNL. Now, this viewer, Jagat Trivedi, he's writing in from Sydney. He wants to know whether it's a good idea to hold RVNL for the next 10 years. He has 40,000 shares at a price of 25 rupees is what he has purchased. I am not sure if that's a typo, but this is what he says. He purchased at a price of 25 and he has 40,000 shares. So, Mr. Chokalingam, do you think the fundamentals are strong enough to hold for a period of 10 years?
For 10 years, it is yes. But unfortunately, I believe you may not make much money in the next 1-2 years because already it is trading at around over 55p on a trailing earning basis and operating margin also in poor single digit. But certainly, yes, if somebody has a view beyond 2 years, it would definitely make a decent return.
Okay, so that's the word coming in on RVNL with a long-term perspective. But we also have Osho Krishnan now joining us to help us with the technicals. Osho, morning, and thanks so much for joining us here today on ET Now. So the first query has come in from Satyaveni. He's writing to us from Hyderabad. Now he says that he wants technical advice on two shares. One is CDSL. He bought about 1,000 shares at an average price of 1790. And BSE, the stock is also buzzing in trade. He bought at an average price of 2810. So BSE and CDSL, Osho, what will your technical view be on both these stocks?
Very good morning, firstly, to all of you. Well, coming to the technical perspective of CDSL and BSE, then both the counters are from the same capital market space, so we can expect decent momentum from a medium-term perspective. But in a shorter-term time frame, there is some kind of consolidation that is being seen in CDSL specifically. It is hovering around 200 the simple moving average, approximately 1490 to 1500 is expected to be seen as immediate support for short-term trader, while on a higher end 1580 to 1600 will be the crucial resistance, and any breakthrough above this zone can only provide some kind of traction in the coming period for CDSL. Now for BSE, again this counter is again hovering near about its 100 exponential moving average, and it is having a very strong resistance of 2500. So one should wait for that levels to cross over, then only we can see some kind of bullish traction coming back in these counters.
All right, so that's the view.
And many of our viewers have sent their queries across several social media platforms. But we have Bharadwaj, who has written to us from Coimbatore, and he has a question on JK Tyre. He says he's holding about 870 shares of JK Tyre at an average price of 290, and he's asking whether he should buy more at the current market price. He's looking to hold on with a time period of 2 to 4 years. Chokalingam, we'll come to you in just a bit, but before that, we also have a caller who is joining us on the phone line. Shankar is joining us from Delhi. Shankar, good morning. Tell us which stock would you like to get answers on?
Well, I have queries about three. They are Grasim, ITC Hotels, and Geo Finance. My question is, should I consider these for a long-term period, typically for 3 to 5 years? And should I adopt a buy-on-dip strategy?
Okay, so long-term time horizon and three stocks you're saying, Grasim, ITC Hotels, and Geo Finance, right?
That's correct, yes.
Okay, Mr. Chokalingam, what will your view be on all these three counters?
Out of these three, Geo, we have a buy recommendation. In fact, we are positioning this as a wealth creating stock for 3 to 5 years. So we have a strong buy on Geo Financial. ITC Hotel, I have no doubt, absolute term, it will create some decent return. But however, in the hotel sector, we have been recommending very strongly East India Hotel Limited, EIH Limited, because its valuations are extremely cheap as compared to ITC Hotel. Not only that, if you look at a shareholding pattern, we find the Reliance Group and ITC Group together holding more than 30% stake in East India Hotel. That gives enormous confidence, and this is the cheapest stock among top 4 hotel stocks. Not only that, if you go through the latest annual report of EIH Limited, it's really surprising. There's a long list of expansions which are happening from current year till 2027-28. So the earning potential upside is very huge. So considering all this, I would recommend EIH Limited instead of ITC Hotel. Grasim, great stock, great management, but it has already played out in a big way. So I would recommend in the large cap space, stock like Coal India or State Bank of India, which I believe would outperform Grasim in the medium to long term.
So that's the view coming in on Grasim, ITC Hotels, and Geo. And Shankar, I hope that answers your query. But since we were talking about JK Tyre, and we have a viewer from Hyderabad who has written to us, Mr. Chokalingam, if you can tell us, what will your view be on JK Tyre with a long-term time frame?
Tire stocks, immediately the short to medium term outlook itself looks very good for 2-3 reasons. Both the rubber, natural rubber and crude oil prices have come down nearly 18% from 52-week high, which is a big positive for tire industry because last 10 years, the upside for tire stocks came more from the input price correction rather than from the solid volume growth from sale of tire to OEMs. So this time again, the tire industry would be the beneficiary. And secondly, as all of us know, the GST reform would improve the sales of vehicles, automobile vehicles. That also would be positive. It's a good to buy for long term. There is no doubt at all. But we have a bias for MRF Limited because I prefer MRF to JK Tire for a couple of reasons. One, it's a leader in the industry and very small retail float, and equity base itself is very small. If at all, I am not forecasting, if at all the management decides to split the share or give bonus or the regulator allow fractional share trading, then that stock can give a phenomenal return. Even otherwise, MRF with recent capex can give a very good return, perhaps better return than JK Tire. But otherwise, JK Tire also hold absolute term, it will give decent return.
So whole call on JK Tire for the long-term perspective. But moving on to the next query then, we have a caller joining us now. He's Somashekar joining us from Bangalore. Hi Somashekar, very good morning. Please ask your query. Which is the stock that you want advice on?
Very good morning to all of you. I need to know about the BEL. Can we buy at the current price, which is a lump sum amount? It's for about 1 year.
Mr. Chokalingam, we'll come to you for a fundamental check, but Osho, what are the technical levels looking like? Do you think current price is good to enter into a stock like Bharat Electronics?
Is into a kind of a time-wise corrective phase. There has been some kind of very strong rally that has been seen in the counter from the zone of 300 towards 430, and now it is still hovering about 50% retracement. So I expect that there is still some room on the downside for the counter. The zone of 350, 360 will be an apt zone to start accumulating, but in a staggered manner. Currently, it is into a sideways phase with some kind of time-wise corrective zone for the counter. So I will advise to stay sidelines or make this counter into watch list. If there will be any kind of correction towards 350, that will be an apt zone to start accumulating the share.
Okay, so a dip towards the level of 350 could be a good point to start accumulating Bharat Electronics. But Mr. Chokalingam, let me come to you. How are the fundamentals looking like for this stock? The viewer is looking to hold Bharat Electronics for a period of 1 year. Do you think that's a good time or should it be longer?
Could be longer because it has already played out. The stock is trading at 49 PE. Yes, it can give 5 to 10% return, but the risk and reward ratio, even in fundamental basis, is not in favor of the stock. While upside possible is around 10%, it can also fall even 10, 15, 20% purely on the ground of valuation. And also this kind of defense companies, March quarter is the best quarter. Prior to that, the quarterly performance may not be great also. Since it's already overvalued, I would suggest wait for at least Q2 results or for 5-10% correction before buying this stock.
Wait for correction before buying this stock. That's the word coming in on Bharat Electronics or BEL. But we have Sunita, who has written to us from Bangalore, and she's asking on GMDC. She's asking whether it is the right time to enter into GMDC. Osho, what will your technical view be as far as this mining counter is concerned?
See, the counter has given a very strong breakout in today's trading session. Only the counter has surged approximately 12% from the opening, but I expect that there is still potential for the counter on the higher end. But at current levels, one should not go with full capital as an investment in the counter. Although from here onwards, I expect the target to be around 540 in the short-term period, but one should wait for some kind of profit booking or cool off in the counter. Nearly 460, 470, which is the breakout zone, will be an apt levels to start accumulating the share. From here onwards also one can start accumulating, but in a staggered manner. In around the zone of 470, 460, one can look for fully investment in the counter for higher targets of nearly 545 for short-term perspective.
From a short-term perspective for GMDC. But moving on to the next viewer, then we have a caller joining us. This is Arjun joining us from Kolkata. Hi Arjun, very good morning. Which is the stock that you're looking to get your query answered on?
Yeah, very good morning to you and to all of the panel. I'm looking for advice on CESC and Tata Consumer. I am holding both of the stocks and just looking for the trend that you can predict.
Okay. Osho, what do you think are going to be the short-term targets for this? I think the viewer wants to hold it for a period of about 7 to 8 months, if I heard it correctly.
See, firstly, for CESC, this counter is into a kind of a lower lows, lower highs kind of a formation, which is kind of a negative for the technical perspective. And also there has been negative crossovers also. So I expect that this might see some kind of consolidation or further cool off towards its very strong support of nearly 145. So that is the zone which is very crucial for the counter. While on the higher end, fresh momentum can be seen only once it crosses the zone of 165. So 145 to 165 will be a crucial juncture for the counter. Buy on dip and sell on rise will be advisable for short-term perspective. Now coming to Tata Consumer, again, this counter has not seen very strong momentum in the recent period, but there has been decent traction in the whole space. So I expect that looking at the sectoral move, Tata Consumer still has a potential to see some kind of positive traction. Although I will be bullish on technical front once it surpasses the zone of 1120. From there onwards, one can see some kind of strong momentum coming back for higher targets of 1220 to 1240 kind of a zone.
That's the word coming in on Tata Consumer. But we have N. Ramesh, who has written to us from Hyderabad. Now, he is a senior citizen. He's a long-term investor. He also says that he's holding about 60 shares of Route Mobile at an average price of 854 rupees per share and about 800 shares of Jamna Auto at an average price of 40. Mr. Choklingam, Jamna Auto and Route Mobile, what will your fundamental view? Because N. Ramesh is clearly a long-term investor.
No, first of all, from equity research strategy, senior people, long-term investors at least should have some large cap stocks. I hope he has a good equity allocation within a balanced manner. Uh, Route Mobile, after the recent major fall, one can hold it. Medium to long term, it can give 30-40% return also, at least after 1 year. Jamna Auto, I have not studied in detail, so I am not able to give any view right now.
So that's the view on Route Mobile. But before we get more of your queries answered, let's talk about a stock that's buzzing in trade today. BSE, it's on fire as market share concerns remain unfounded as of now. Now, remember, this week marked the first weekly expiry change. Analysts were expecting NSE turnover to rise at BSE's expense. However, early data is indicating that market shares as of now remains unchanged. My colleague Pulkit is standing by to take us through all the details. Pulkit, over to you.
Yeah, sure. So as we were expecting that the NSE's market share will increase as compared to the BSE, as this was the first week when the expiry days were interchanged. Now the Nifty weekly expiry is happening on Tuesday, and for Sensex it is happening on Thursday. But if we talk about the first week data, so earlier what used to happen on the expiry day, generally for the Nifty, for the NSE, it used to be around 90% market share. But in this week, when it was on Tuesday, again it was seen as a 90% only. And when we talk about the BSE, on the expiry day of BSE, that was on Tuesday, it used to be around 56%. And yesterday when the BSE expiry happened, it was again on the 56%. So we can clearly see that the traders are preferring their preferred exchanges irrespective of the days, and they are going through that wafadari apne saath hai. So maybe we can expect a different data in coming weeks. But if we talk about the first week data, it is clearly showing that there is no impact of market share changes, and BSE is again holding the same and NSE is again holding the same. There are no changes.
Okay, so no changes in market share. That's the view coming in after the expiry changes and the fact that days for expiry have now changed. Pulkit, thanks so much for joining us with all those details. And remember, BSE is up 6% on the back of this news as well. But shifting focus to a whole host of other queries that our viewers have sent. And we have a query that has come in from Vadodara. Sunil G is writing to us. He's asking for Mr. Chokalimgam's top picks for medium to long term with an investment perspective and a long term time frame. Mr. Chokalingam, any stock specific ideas that you can share with us?
Yeah, definitely. The foremost one is CDSL. After the recent correction, this is a very good stock, I believe, for medium to long term. every week, even now, 6 lakh new investors are entering the capital market, and the market structure is a duopoly, only two player. I don't think this duopoly structure can be disrupted in the medium to long term also. That is the one stock. And second stock is KCP Limited. It's a diversified company engaged in cement and sugar. It's making a phenomenal profit from sugar business in Vietnam. And we have done a SOTP analysis. On the base of SOTP analysis, in intrinsic value is more than 2 times current market enterprise value. The company has a lot of cash on books. It has got a lot of rich land bank. And just as a disclosure, among all the stocks, we have personally invested only in KCP. And third stock is PNB Housing. Post this recent crash in the stock price, it is available at around 1 time price to book value for the current year. I believe it's very, very attractive. And this kind of institutionalized business won't find any great difficulty in getting a suitable leadership for running the business. And I would consider, the exit of CEO and the subsequent severe crash in the stock price is a great opportunity to buy. Similar thing happened in Infosys. Subsequently, it rewarded. So same way, I believe PNB Housing also would reward. These are the three stocks I would, have a strong buy recommendation for medium to long term.
Mr. Chokalingam stock picks for a medium to long-term perspective. But moving on to the next query, we have our next caller joining us. He's Suresh, joining us from Chennai. Hi, Suresh. Very good morning. Which is the stock that you're looking, to be advised on?
Yeah, actually, I purchased 3 shares of Welspun Corp at an average rate of 224 rupees. Now, my question is it the right time to exit or shall I hold?
Okay, Osho, let me come to you for this one. What do you think? Do you think it's worth holding on to? What are the charts suggesting, or should he exit at this juncture?
See, overall, there has been a tremendous move in the counter from where the investor has invested in Welspun Corporation. And I expect that in the short-term period, there is a possibility for further correction in the counter towards the zone of its breakout zone, which was nearly 790 to 800 kind of a zone. But from a longer-term perspective, we are still very much bullish, and technical parameters are still looking very positive for the counter. So any dip towards the zone of 800 can be seen as a buying opportunity in the counter from short to medium-term perspective. So I will advise that if the fund is not required as of now, then one should stay invested in the counter. I expect that on the higher end, 950, 1000 can be seen as the immediate target in the short to medium term time frame.
Word coming in on Welspun Corp, but we also have Govind, who has written to us from Hyderabad. Now he is asking whether it is the right time to enter into MCX for long term. Mr. Chokalingam, what will your view be? And he's saying that he's having about 5 lakhs he wants to invest for his children's education. What do fundamentals suggest for this counter? MCX, what will your view be?
Certainly, MCX has been doing very well. It will continue to do well. And what only concern is that slightly stretched in valuation. I personally prefer CDSL to MCX because CDSL, as I mentioned, it will not have more competition, at least in the near future. But of course, MCX, if somebody is holding, can continue to hold. Absolutely, it will give a decent return. And also, after the exchange business has been being made universal, which means even the commodity exchange business can get into equity. So my visionary expectation is that even MCX might consider, expanding the exchange business. So yes, one can hold. If there is any small correction, one can buy MCX as well.
All right, so if there's a small correction, you could consider buying as well. And if you continue, if you have the stock already, you could hold MCX. But moving on to the next query, then this is coming from Krish. He wants to know that he's been holding Coromandel International, 35 shares at a price of 2,400 rupees. He wants to keep the stock in his core portfolio and is looking to add on every dip. Mr. Chokalingam, do you think this is the right strategy and it's a good stock for the long term?
Yeah, certainly. In the last 20 years, 25 years back, the stock was around 30-40 rupees. Tata Group has done phenomenally well. They are into phosphatic fertilizer, which is in short supply in the country. They are the leader. Yes, medium to long term, they will do well. But back of the mind, keep the fact that valuation is slightly stretched, and also the rupee depreciation is negative for phosphatic fertilizer. Although the government meets through subsidy all the cost, always historically significant depreciation of currency is slightly negative in the short term for fertilizer companies. So any major dip happens, one can buy. Otherwise, it's a good to hold for long term.
Okay, so that's the word coming in on Coromandel International. But we also have Raghuvendra, who is now joining us from Bengaluru. Morning. Tell us, which stock would you want to get answers to?
Hi, good morning. I hold SJVN from last 6 to 7 months. My buying price is 132. Now currently it's trading around 92, 93 range. Is it good time to average? And I want to know the fundamentals of this SJVN company.
Chokalingam, what will your view be on SJVN? Should he average? Should he exit? Fundamentally, how is the company?
One can hold it. If there is any 5-10% recovery, one can sell, because it is trading at over 50 PE, and return ratios are very poor, single digit. Therefore, I would the best suggestion would be to hold, but certainly exit if it recovers even 5-10% from the current level.
So that's the fundamental view on SJVN. Raghuvendra, hope your query was answered. But that was the last query of the day. Thank you so much, Osho and Mr. Chokalingam, for joining us today. On that note, we'll let you go. Well, that was all the time we had today on this edition of Buy Now, Sell Now. We'll see you Monday at 11 a.m. But don't go anywhere, as markets at noon